Hello and welcome to our State of Consumer Tech and Durables webinar, Gearing Up for Q4 and Beyond. Thank you very much for joining us today, and also a warm welcome to our two presenters, Namrata and Diane, who are going to provide the insights on today's webinar. Just to let you know, the presentation will be available 24 hours after the webinar and also the recording of the webinar too. I will now hand over to Namrata, who will start us off.
Thank you, Charlotte. So before we begin, I would like to inform you that the insights we will be sharing today are drawn from the new edition of our biannual report, which is State of Consumer Tech and Durables. It will be released today, and in the follow-up email to this webinar, we'll also be sharing the link to download the report. So let's start today's session. Diane and I will be presenting tech and durables sales performance, consumers' trends or behavior in the new normal, and lastly, key strategies for the last quarter of this year as well as 2023. In the first half of this year, we see tech and durables industry amassed $413 billion and decelerated by 5.5%. Now, the last year's growth was fueled by the stay-at-home trends, and it was an exceptional year where we saw the market pie itself increase considerably. So even though we see a deceleration of 5.5%, we should keep in mind that this is against a very high baseline of 2021. This decline is visible across all product categories, from major domestic appliances that witnessed the least decline of 2.6% to office, with a decline of 8.5%, and the most decelerating products, that is photo, registering the highest decline of 12%. Again, these declines are against an extraordinary performance of these sectors in 2021, and their performance is still above the pre-pandemic times. This year also, what has happened is the COVID-19 restrictions have largely been lifted. There is a shift in consumer spending priorities. Consumers are allocating their household budgets to out-of-home activities like traveling or socializing and spending less to elevate their at-home experiences. When we look at the sales performance by quarter, it is quite evident that the deceleration has ramped up in the second quarter. So let's first focus on the value performance, which is on the left side. In Q1, value declined by 4% when compared to 2021 versus a 7% decline in the second quarter compared to last year. Even when we compare it with the 2019 performance, Q2 growth has slowed down considerably. And one of the major reasons for this is the war in Ukraine. It has further worsened the existing supply chain issues, slowed down the GDP growth, and even inflation has reached record levels. So as a result, consumers' household budgets are further tightened. Consumers are now very cautious, are even hesitant to purchase, and are more focused on savings rather than spending. But both quarters' revenue performance is still above 2019 levels. Volume, on the other hand, has declined significantly, and not only compared to last year, but also to the pre-pandemic times. We continue to see the disparity in value and volume this year too. This means that premiumization still exists, but not at the same level as last year, but at a much slower pace. The impact of war and even the inflationary pressures are not the same across all regions. There is a difference between the emerging and developed economies. In Western Europe, for example, value sales declined by 11%. And impact of this geopolitical situation is much higher in Europe compared to the other parts of the world due to the stronger dependencies some of the European countries has over Russia. Another contributing factor is also saturation, as consumers purchased products earlier than they had planned. China, on the other hand, has declined by 8% this year due to the recurring COVID waves, and following the zero COVID policy and the subsequent ports shutdown, not only affected their performance, but also rest of the regions, which led to rising shipping costs, manufacturing costs, and raw material costs. But there are still some countries and regions which are continuing to grow. For example, emerging Asia grew by 15%. This is also because of the lower baseline of 2021. Their COVID peaks were in the first half of last year, and we think that this pace will also slow down by end of the year to a much moderate level. Another region that's growing is Middle East and Africa at 3%. And it's mainly fueled by the rising oil costs, leading to the increased purchasing power of their consumers. The worst price hikes, though, are over for some of the key raw materials. Prices are on the decline. For example, palladium, which is mostly used for multi-layer ceramic chip capacitors, declined by 19% compared to last year. Copper and aluminium prices are also on the downturn. Lithium, which is used in the batteries and all powered electronics, continue to become expensive, with a 434% price growth compared to last year. Oil as well, which is essential for logistics and transportation, is operating at higher levels. Even the difficulties that the global supply chains had at the start of 2022 are showing some signs of improvement. The average lead time on shipping from China to the US was 63 days in July this year, and that is down from 80 in December last year. We also see some relief in the shipping costs. There was a 22% decline in costs for shipping from Asia to North Europe. But looking forward to the next quarter and also the following year, even with a decelerating demand, some challenges will continue to persist. If not because of the volumes, then with the labor shortages. And even with the relief that we saw in some of the raw material costs and supply chain worries, inflation is still on the rise. IMF predicts it will be 8.3% this year. That's 0.9 percentage points higher than the Q1 prediction. And when we compare the average price of each month, always with that of Jan 2020 as a baseline, we see that there was a steady price increase of 13% to 29% last year. And these price increases were because of a mixed effect. On one end, it was innovation that drove premiumization with higher launched prices. And the other was the rise of average prices of mass segments due to the supply chain costs, raw material costs, and also manufacturing costs. But as demand started decelerating, we see the average prices continued to stay on this new stabilized levels. So it's highly unlikely for average prices to continue to grow as consumers are this year specifically more sensitive to prices. More so, retailers are not really pushing these prices to the consumers.
Let's continue and let's look at how the consumers are now behaving in the new situation and what kind of major consumer trends we are identifying. Overall, when we're looking at the consumer confidence, and that's an indicator and a combination of different aspects, so consumers evaluating not only their personal situation and their household situation, but at the same time, the overall economic situation. When we're looking at consumer confidence across the globe, we see that this confidence is in decline. We had a confidence above 100, which is a positive outlook into the future for the past year and also before in most of the areas. Now, looking at July 2022 numbers, we see that the confidence dropped to even below 100, which would say that the consumers really have a negative outlook on their personal, but also on the overall economic future. Not surprisingly, we also experienced that 53% of consumers, they now think that it's a good time to actually wait for purchases instead of doing them now. And that already shows that a lot of the consumers are really hesitant to do some purchases that are not necessary today. And this really shows a more negative situation and evaluation of consumers across the tech and durables categories. But at the same time, there has also been another major shift, which is to consider, that is online. And online has been obviously a trend for quite a while already, has been accelerated during COVID-19 times, and ever since is on a very high level. Where we've seen that back in 2019, 1 in 5 purchases have been conducted online. We now in 2022 have one in 3 purchases that are sold online. So there's a clear increase in sales for online. And this is obviously not going to stop, because consumers are still believing that at least 50% of them will increase their online shopping behavior even for the future. So those two are really the two major key elements of consumers' behavior and shifting. And let's now also bring the market and consumer perspective together. And let's look at what kind of innovation areas are key opportunities for companies, and what kind of key strategies to look for the months ahead.
Let's first look at the past and analyze how the tech and durables industry has performed during the times of crisis. We have segmented the brands as premium, standard, and entry basis their price index. And what is price index? Price index is a percentage of a brand's price relative to the average selling price of a product group. So TV categories price index, let's say, is at 100, and brands whose average price is 150% or more compared to this category price will be termed as premium. Similarly, price index of brands falling between 75 and 150 are standard brands, and 0 to 75 are entry brands. But premium prices vary by country. It will not be the same for Germany and Singapore. So to avoid this bias, we look at price index per brand, per category, and which is then aggregated up to global level and all key product groups. Focusing on the brand performance during the crisis of 2008, we see premium brands grew at the most at 12% in 2008. And the share was 14%. What we also see is a polarization in market, and it existed in 2007, but it continued on in the following years. Even in 2009, we see an increased share of premium brands to 16%. And while entry and premium brands were growing, standard brands were facing challenges to sustain the market share. Comparing their performance again during the pandemic, we see a similar pattern for 2021. 32% value growth of premium brands and 17% for entry brands. What is also important is to see how the share of premium brands has increased from 24% last year to 25% this year. We also think that we will continue seeing these polarizing trends in Q4 and most likely in the next year. So what can help you win in a polarizing market, and how does innovation play a role? So let's look again at how innovation has helped brands win and win big during the 2008 recession period. First, we looked at brand level performance in revenue and volume for a long term, that is from 2005 to 2009. We aggregated the brands with highest value share gains during this period as winning brands, and brands which lost their share were aggregated as losing brands. The bars on the chart represent the indexed value share of new products that were launched by each of these brand groups, with 2008 as baseline. And we can clearly see that the brands who were able to, or who continued to invest and innovate or launch new products, not just launch new products, but also in the relevant or growing segments, were able to gain higher value shares, that is, or indexed value share, that is from 79 points in 2005 to 123 points in 2009. Again, this is a similar trend that has played out during the pandemic. The baseline year, however, now changes to the year 2020. Winning brands index grew from 99 points in 2017 to 140 points in 2021. In our opinion, there are 4 innovation areas where, if invested, will not only help you win in the immediate future, but also in the long term. And these areas are premiumization, sustainability, omnichannel, pricing, and promotions. So let's start with premiumization. Earlier, we saw a deceleration across all sectors in tech and durables industry. But there are some pockets of opportunities that continue to exist. It's mainly driven by premium segments that continue to add value to consumers' lives. For example, robot vacuum cleaners with a dirt extraction docking station grew at 78%, or washing machines with steam function are growing at 11% in a category that is declining at 3% compared to last year. Bigger TVs, even gaming laptops, are also excellent examples of how consumers are still willing to pay more for entertainment at homes. Clearly, there's one consumer segment that is unaffected with the ongoing economic turmoil and also the inflationary pressures, and would continue to indulge in these products. And who are these consumers? We have identified 2 audience profiles from our Neuron platform, high-spec premium and brand enthusiasts. High-spec premium consumer profiles' main focus is a feature-rich device. Usually, these devices come at a high cost and they don't mind paying more. Brand enthusiasts, on the other hand, are more reliable on the brands and the image of brands. And they also feel that their choice of brand always delivers the right features or functionalities. It's also important to note that these 2 audience profiles share of their purchases of tech and durables products continue to remain the same as last year. That is 15%. The share, however, varies by category. So smartphones, for example, has shorter life cycles and is one of the first categories to adapt to the latest technologies, where we see high-spec premium consumer profiles with 21% share. Whereas home appliances, like washing machines or TVs, are still very much brand focused, where we see brand enthusiasts with higher shares. Now, these pockets of opportunities are not only with the premium consumers. There are also non-premium consumer segments who will be on the lookout for products that not only add value, but also ease their financial pressures. From our recent social media polling, we know that 41% of global consumers will continue to study as well as work from their homes, which means mobility is not yet at 100% compared to the pre-pandemic times, nor will it reach to 100% this year or early next year, because companies continue to offer hybrid work models to their employees. Consumers' budgets are shrinking, not because of inflation, but also rising energy costs. Our research suggests 39% of consumers agree that buying smart devices that help them optimize their energy costs, if not immediately, at least in the long run, is one clear case to buy smart devices. For example, smart thermostats, which saw a 48% increase in sales in first half of this year compared to the same period in 2019, as well as smart LED lamps, which grew by 32% this year compared to the first half of 2019. 43% of consumers also believe that smart devices makes their lives easier by saving time, efforts, as well as the smart devices offer add-on functionalities that are easy to use or convenient to use. This is also evident in the growth of smart major domestic appliances, which witnessed 69% growth this year compared to 2019, even with higher penetration rates. And sales of smart home monitoring devices or home automation devices also increased by 102%. And all of these products are not low-cost items. The fact that they deliver energy savings, increased convenience, and portability allows consumers to justify the expense, even at a challenging economic time. And all of these also provide a clear USP in saving consumers time as well as hassle.
Now, smart devices are a good example for one of the other major trends, sustainability. And sustainability continues to be still very important for consumers. 73% of consumers believe that it is very important that companies take environmentally responsible actions. So consumers really want companies to act upon. At the same time, they're also willing to invest in sustainable products, and 27% have purchased refurbished products rather than buying a new one. So of course that allows them to kind of go into two directions. First of all, save money with the refurbished item, but at the same time also do something good for the environment and reduce environmental impact. Now, when we're bringing those two major trends together, on the one hand, performance, premiumization, and sustainability, that is clear that they can also go very good hand in hand. So we have seen those examples already. And giving you another example, when we're looking at refrigerators, that is, of course, the best case to have a high-performing refrigerator, but that at the same time offers the best-in-class energy consumption. So there is a good room and to offer a good product portfolio around those major trends and consider really what's important for consumers. So despite all the negative consumer sentiment we have already seen out there, the overall sentiment, and this is an example from Germany, is really in decline still, with minus 28% at a very negative rate in July 2022. But at the same time, the sentiment towards sustainability, that is still on a very high level. So with 40% or 39%. So consumers in Germany still very much consider sustainable actions. And how we bring that together with the premium aspect, another example here, when we're looking at the dishwasher category, that's across Europe, we've seen that in 2020 actually, an average price of 690 euros for a AAA product that has already been kind of up to, for a similar category, so which is A now, up to 1,000 euros. So even with the similar product definition and similar product offerings, we see that consumers are willing to spend more for delivering those kind of benefits, which would at the same time be lowering the energy consumption, but also save money in the longer run. So you might have also noticed, it has been all across the press, that Patagonia founder Yves Chouinard has been just bringing all his shares into a trust, or is intending to do so. So I would really just like to quote, instead of going public, you could say we're going purpose. Earth is our only shareholder. So there's something very extreme and obviously not a route for every company to go. But what are the opportunities you're now having out there? And we know from our GfK brand architect research in different categories and countries that there is different routes in building a strong brand. Brand strength can be derived by two different facets, one or the other or both. One is building a brand premium. The other one is building brand choice, so volumes. Now, when we're looking at the different drivers towards those different facets of a strong brand, we noticed that for building brand premium, there is those topics very relevant, like a differentiated brand, an excellent brand, playing with innovative products, endorsement of the brand and products, and also topics like fashionability and distinctiveness come into play. Whereas when we're looking at how to drive brand choice, we are more into the basic needs, looking at a value for money product, value pricing is important, but also building trust for a brand and also relevance of the product. Now, when we're looking at what is really the common denominator between those two facets, building brand premium and brand choice, it is values and purpose. That sits within those two elements and to drive those two. But at the same time, of course, we need to differentiate, because values and purpose can be a very different detail level when it comes to building a premium brand versus building a choice brand. But at the same time, we've seen that sustainability is a big part of value definition, and that is to be considered when building a strong brand for now and in the future. Now let's continue on a different topic, that is omnichannel. So omnichannel was one of the other key areas of innovation and a key strategy. And why is that? Because we have seen that 61% of consumers, they really went online while actively researching for a product to buy. So a very high share. At the same time, it's also 61% that would now buy offline. So obviously there's a lot of movements between the different channels. Consumers researching online and purchasing offline, and also vice versa, and also the multi-channel approaches. So omnichanneling is very important, and offering a seamless omnichannel experience is really an opportunity for brands to win. When deep diving into different online channels, as an example, we have seen there is some shifts in the channels that consumers would be using. We've seen an increase for retailer websites, which are now up to 48% of consumers researching there. And we have social media with 27% that also saw an increase of usage across, comparing that to 3 years ago. So deep diving further into social media, it's about 18% of consumers globally that say they are inspired by social media advertising to really make them purchase a tech and durables product. So that's already a very good share. And now when looking specifically as an example of China, we have an online overall share of sales of 43%. That has been boosting across the past years, coming from 15% in 2015. And now of this, almost half of the purchases done online, we see that social commerce plays already a very big role. So 15% of the online sales are social commerce, for an example in shavers in China. So the landscape is also here moving and shifting, and that is to be considered when placing your offerings and where to play. Another aspect of the where should you play is also to consider regional differences, and there is new opportunities within regions you might not consider yet. So again, looking at the consumer confidence, we've seen that it is in decline across a lot of the regions, and especially when pointing out some of the countries. In Europe, we have a clear negative development compared to the previous year, whereas in emerging markets, there is still some very positive sentiment and mood. We've seen Brazil adding 5 points versus previous year, South Africa as well, and Indonesia, and also India with a really confident outlook in the future with plus 11 points. So there is still some good opportunities even with emerging markets to be considered and leveraged. Overall, considering emerging markets, there is clearly lower penetration rates of a lot of the categories for tech and durables. So there is some good potential simply because of the penetration rates as well. And also just to give you an example about how big those opportunities are. When we're looking at the first half of the year 2022, to consider Middle East and Africa, we have an overall value of $26 billion and an increase of 3% versus previous year. In emerging Asia, we have even a $50 billion market and an increase of 15% versus previous year. So you see there's very good dynamics in some of the regions and countries, and that is to be of course balanced with the strategies you have and adapt to the pockets of opportunities we see.
There are also differences in the potential demand across the regions. So last year, supply chain issues have worsened, and so brands, retailers, or even distributors ordered more to meet the ever-growing demand of the consumers that were stuck in their homes. This year, though, the volume is decelerating, or the demand is decelerating. So the pre-ordered stocks remained. And retailers are now trying different ways to clear the stocks. One of the ways is price cuts. Here we are using an example of TV category. Now, TV category has been declining since last year. This year, it further slowed down. However, the promotions for this category are booming. 27% of TVs that were sold this year were sold with a price cut of more than 10%. That's twice as much as last year. And except for developed Asia, we see this trend across all the regions, particularly in the emerging Asia and Western Europe regions, where we see the highest price cuts. This is also a trend we think will continue for the rest of the year, especially now because consumers are affected due to the inflation and energy costs, and are also looking for a better deal or bargain to make a purchase. Furthermore, key promotional shopping events like Singles Day, Black Friday, and Christmas are even more critical as consumers are seeking value to stretch their budgets, either buy affordable premium products or pick up the cheapest deals available. And these events are no longer restricted to just one country or region, but are becoming global events, increasingly more so. So therefore, it's important for brands and retailers to find ways to capitalize on these events. For today, we are looking at the 618 shopping event example in APAC. We are comparing the weekly performance of this shopping festival with last year and also 2019. And even in a decelerating and polarizing market, there was a volume growth of 8% compared to last year. Also, both value and volume are remaining at or are functioning at higher levels compared to the pre-pandemic times. This is also yet another classic example of polarization, where only entry and premium brands are growing by 6% and 10%. Hence, it's important to rethink, plan, and participate in these promotional events, because these events help nudge consumers into not only buying products, but also spending a bit more for higher margin gains. So to summarize today's session, there are 5 key takeaways. First is investments in innovation are especially important during the crisis, because this will not only help brands to sustain market share and recover faster, but also grow market share. Premium opportunities exist and varies by consumer segments. So focusing on the right consumer segments and the market segments will help not only gain higher profits, but also market share. Sustainability continues to be an important value for consumers. So innovating to balance consumers' needs as well as values is key for long-term success. It's also important to fine-tune pricing and promotion strategies, as non-premium buyers will look out for a bargain. But overall, also, all consumers are looking basically for a seamless experience across all channels. And last but not the least, drill down into data. The landscape is changing rapidly and it varies across countries and regions. And deeper dives into data are extremely important to not only stay on top of these trends, but also be able to craft relevant brand positioning. For this, I think we can now look at some of your questions.
Yes, absolutely, we can. So we've actually had quite a few that have come in. So we will get to as many as we can, but if we haven't answered your question, then we will come back to you after the webinar. So we'll start off with this one actually that's just come in. Do you think that the expected sort of average product prices will continue to rise further in 2023?
I think it's highly unlikely that the average prices will continue to increase. One of the major reasons is the decelerating demand. And we saw it initially how even though the premium segments or the new products that are being launched in the market are launching at higher prices, but the decelerating demand is basically offsetting that average price increase for any category. So what we also think is, even it may stay same for this year as well as next year. And the price erosion of the mass segments, or even the average price of mass segments, will most likely be the same for next year.
Great. Thank you, Namrata. A couple of people have asked this same question. So we've talked a lot about premium strategies today. What if my brand tries to build volume in low to mid price bands?
Yeah, I'm happy to take that one. So we have seen that the different drivers for building premium and volume are very different. So of course, if you're trying to go on a volume strategy in a mid to low price tier, and that there is a lot of opportunities, of course, out there. So it is important to understand what are the specific drivers, even though we know that the overall drivers for brand choice and volumes, they are clear. It's about value pricing, it's about ease of use, relevance, and building trust with consumers. But of course, it's important to understand in the category you're playing in the countries you want to play in, what are the differences to consider. And of course, we're happy to discuss that any further with you, afterwards.
Great. Thank you so much, Deanne. And then as we have got the World Cup and Black Friday coming up, how will the factors that we've talked about today impact sales during those upcoming promotions?
I think I'll take that one. So we saw an example of TVs, right? And in our opinion, the promotions for this year will also have extremely strong demand. There will be a strong year of demand, or rest of the year for demand, because a lot of consumers are waiting to find the right deals. We saw earlier, Deanne presented that 43% of consumers are still waiting. And we think that most of these consumers will make a purchase during these promotions, if not to replace a faulty product or buy a new product, but there will be purchases. And I think they are eagerly waiting for the promotions to come up and find the right deals. And it becomes even more important then for retailers and brands to really rethink their consumer segmentation, because not every promotion is going to work for all the type of consumer segments that we are seeing in this polarizing market. So the promotion has to be targeted for each of the consumer segments that we are seeing. So relooking at the segmentation and then having a targeted promotion would be key to success.
Great. Thank you so much. Useful insights for us going forwards. And then we've probably got time just for one last question around sustainability. So you mentioned in Germany, the example that you shared in Germany, the people are willing to spend from a sustainability perspective. Is that similar globally, or did you just pick out Germany because they were sort of the best example?
Yeah, good question. So maybe I can take that one. So overall, sustainability is really a key global trend. We know that it's a very global trend. At the same time, there might be quite some regional, even local differences. So sustainability in some countries might come across as really playing into the premium areas, playing with premium products, and premium consumers that are well able to spend more to treat them, to make them feel good about the sustainable products to buy. At the same time, there is, of course, a lot of regions that might be more interested into the energy saving aspects of sustainability, as an example. in order to really kind of save money and all of those aspects that really ease their economic situation in the longer run. So even though it's a really global trend, there needs to be regional differences to consider, and also portfolio decisions made well knowing regional differences. And I think again the offer, of course, we to kind of help you build that out, because differences matter, and building concrete strategies to categories and countries is very important as well.
Great. Thank you so much, Deanne. And I think that's probably all we have time for today. So if we haven't been able to answer your question, then we will certainly come back to you. And just as a reminder, we will be sending out the recording of this webinar and also the slides 24 hours after the event. So make sure you check out that in your inbox. And I'll also be posting a link in the chat box that you can go and download the report as well. So I will say thank you very much to Namrata and Deanne for their time today, and hope that you have a good day.
Thank you. Thank you everyone for joining. Bye-bye.